In today's video, we are going to talk about why the Dow Jones Industrial Average is an exciting index to watch, but not usually helpful for long-term investors. So why is it exciting to watch? Well, the Dow Jones is currently over 40,000 on the index price, and so the moves, the ups and the downs, look really big in the media. And so a 1% move in the Dow Jones Industrial Average might be over 400 points, which from a media standpoint sounds like a lot. So you might see things like the Dow crashes 400 points or the Dow surges 400 points, and we spent some time in other videos talking about these words the media uses to make these moves feel more relevant. Why do they do that? So they can get you to watch TV, of course. They're selling commercials. They're not selling good financial decisions. So, okay, there's big moves from a price standpoint in the Dow Jones because the price at over 40,000 is really high. So why do I say it's not really that useful as an index for long-term investors? And the reason is it is the way that the Dow Jones is weighted. And so what's in the Dow Jones Industrial Index? Well, there are 30 stocks in the index comprised of all different industries. You have technology, industrial, healthcare. We think, okay, well, that sounds reasonable. Why don't we like that? Well, it's not about necessarily what's in the Dow Jones, but it's about how it's weighted. So which companies are making up more of the index, which ones make up less of the index, because it is not equal. And the Dow Jones is what's called a price-weighted index. So let me contrast that with the S&P 500, which is a market cap weighted index, meaning bigger companies make up more of the index. So the biggest 5 companies in the United States that are publicly traded make up a large amount of the S&P 500. Kind of makes sense. So what is price weighted when we talk about how the Dow is weighted? What does that mean? It means the price of the stock, not the size of the company, determines the size of the weighting in the index. And I'm going to give you an example of why that is not a great thing. So let's go to the chart here. This is a breakdown of every company that is in the Dow Jones. Okay, now as you can see at the top, might be a little surprising, might not, but the number one holding is United Healthcare Group. Why is that? Well, it's not because of the size of the company, it's because of the price. The price of United Healthcare is $615 a share. Well, let's look at the price of these other companies as we look down, right? Goldman Sachs is at 593, and I'll use Apple because it is the largest company in the index. It is trading at 224. So in this scenario, in the Dow Jones, United Healthcare is making up 3 times what Apple, the largest company in the United States, is making up. So realistically, to get an indicator of the US economy, it is not that helpful because that's not really the weighting of the US market. Now, I want to give you an extreme example. So let's say we were to include a company you might have heard of, O'Reilly Auto Parts. Okay, now they're down the street. You can go and you can buy stuff for your car. If you want to fix it, you can buy stuff to clean your car. Okay, great. O'Reilly's been around a while. Now, O'Reilly trades at $1,200 roughly, depending on the day, per share. So if O'Reilly were included in this index, to give you context, it would be double the highest weighting in the index. And so if O'Reilly were put in here at $1,200 a share, it would be over 16% of the Dow Jones Index. Now, okay, well, how big is O'Reilly? Well, now let's look at the size of these companies. O'Reilly is around $70 billion in market cap. That is not a small company. But when you look at $70 billion and you compare it to all these other companies, I'll use Apple again as an example, right? $70 billion versus over $3 trillion, yet would make up in this scenario a much larger portion of that index. And so as you can see, the price-weighted index gives a skewed number when you think about the economy, the companies that are in the economy. And so while those swings, since the index is over 40,000, seem really exciting to watch. Up 500, down 200, up 1,000, whatever they might be. It's probably not a great indicator of the overall economy, and it's probably not a great indicator of your specific portfolio. Because most indexes, most mutual funds, most ETFs, they don't even really focus on the Dow because it's just not a great indicator of the way that you would build a portfolio. And so again, with the Dow Jones, interesting to watch if you love watching the ups and downs of the market and you love watching the media sensationalize what should be a pretty boring investment process. So exciting to watch, but not very helpful for long-term investors. I hope you found this helpful, and as always, thanks for investing your time with the Personal CFO.